Hello, everyone. This is Marvin Smith. How is everyone doing on this Sunday, April the 4th? April 4th, the month of April. Today is Sunday the 7th, 2024. So I just wanted to go live for a minute. I did a replay of a live that I did prior talking about the W-2. And it's been an interesting 2 weeks, may I say. One with the bridge collapsing in Baltimore. And recently this week, there was a little slight earthquake for those here on the East Coast coming down from New York, Pennsylvania. The first time in my life I've experienced that. I've heard of earthquakes, seen earthquakes on television, on the news, but never really experienced one. So as long as you live, you're going to experience things. And when I was actually sitting down and felt the vibration and some as it was shaking, and I said that I know back in New York, for those who live in the Bronx, um, or those who live on Broadway, where you got the J train, right? You got the J train going to Williamsburg, another part going to Queens, the last stop in Jamaica, Queens. Um, so if you live in those areas and Bedford Stuyvesant on the J line, under the J line, you know when that train comes through, that noise sometimes, and it's like it's vibrating. Or those who take the number 3 train, getting off at Southern Rutland Road, you're going all the way past East New York, all the way down to Broadway Junction over there on the L line, so you know what that feels like. But here, being in where I'm at, we don't have that here, because unless you live further up in Philadelphia. But as you go up further northeast and stuff like that, you won't see that. We have the regional rail, which is said like a Long Island Railroad that passes through. But I'm like, wow. And I'm telling someone, I said, do you feel that? They said, yeah, that's an earthquake. And then they confirmed it, that it was a slight earthquake. And when I saw the news, they mentioned it from New York down to Pennsylvania and somewhat on the East Coast here. So what I wanted to talk about was the tax strategy and wealth planning. And I wanted to follow back up on what I mentioned about the W-2. Um, but prior to the W-4, when you go, a lot of you, when you go for a new job, they give you a W-4. So there's something called allowances. And allowances are what you say, for example, what you claim. So you might claim yourself, that's one allowance, which is one. You might claim your wife, that's the second allowance, two. Two, claiming two. And then you might claim your children, right? Because now you want less money taken out of your check so you can bring home more take home pay. A lot of people do this. So they will hold their allowances, having less taken out of their paycheck and more coming home. Now, the problem with that is what you have, you're taking out less now, you know that you're going to owe more later. Take out less now out of your paycheck, you're bringing home more money. However, you know that you're going to owe at the end of the year. That's the equation. You're having less taken out to bring home more, but at the end of the year when you file, you are going to owe back what you're gonna actually owe more tax. You're gonna owe taxes when you file. What's the equation? You'll you have a lot of allowances that you're claiming, which are yourself, your wife, and children. You're having less withheld from your paycheck to bring home more take home pay. But when you file your taxes, you're gonna owe. So that's the equation. Um, an exemption is a certain amount that's excluded from your taxable income. That's an exemption. There's allowances and there's an exemptions. Allowances reduce the amount of money that's taken out of your paycheck when you claim your wife and your children. Right, you might claim three. An exemption is a certain dollar amount that's excluded from your taxable income. That's not counted. It's excluded from your taxable income. So I want to bring that out. The other thing is what I want to talk about is, and I heard this morning as I was driving. A lot of people will create LLCs, and I would say like right now, I think like 99%, the 99% of people are just claiming, are just forming LLCs. You have some people being told by gurus and experts and motivational speakers, or people who call themselves experts or gurus or business advisors, telling people to form an LLC in the state of Nevada. Let's say, for example, you live in New York, but you form an LLC in the state of Nevada. Telling people to form a corporation in the state of Wyoming, but yet you live in Pennsylvania. And my advice to each and every one of you, um, wherever you live is where, whatever state that you live in is where you should create your business, your LLC, your S corporation, your partnership. Whatever state that you live in, that's where you will conduct business, and that's where you should form your business. All this about Nevada and Delaware and Wyoming, and you're a non-resident. That's why they came out with um, corporate the Corporate Transparency Act. The corporate transparency transparency means to be transparent and truthful, and the business owners information. Why? Because as I mentioned, many people are listening to these business advisors, these gurus, these so-called experts telling people, or listen to YouTube, well, go form a LLC and form it in Nevada, but yet you're living in Brownsville, but you forming an LLC in Nevada. Make that make sense to me. Yet you have to pay what? An annual fee, which is called an annual report every year. Yet you're living in New York. A lot of you go on to form LLCs for the sake of forming it and don't understand what it means. An LLC limits your liability. It's a limited liability company. What does that mean? It protects your personal assets, something that you personally own. For example, if you have a house, correct. So if they sue the LLC, the company itself, they only can do what? Take what's inside the LLC. Again, for those who are forming LLC for the sake of forming it, a lot of you don't know what it means. So you're just doing what you hear because someone else said it. And a lot of you, I'm going to be honest, to be truthful, many people are doing criminal behavior and disguise of forming an LLC. So when you form your LLC, you want to come up with the name. First, you want to form the LLC in the state that you live in. That's the first thing. Then you want to check the name to see if anyone else have that name. Then once you check the name, you want to begin the paperwork. And a lot of you want to do it on your own. And most of the time I've seen where it's done incorrect. Done incorrect. You're trying to save money. And when you think like that, what happens is you're going to make a lot of mistakes. As I mentioned, before you go in business, you should always have a plan. So the next step is to create the LLC by picking a name, and the LLC should be established in the state that you live in. Then once you create the LLC, next you're gonna get what they call a tax ID number, which is a 9-digit ID number for the LLC. The LLC is going to have a tax ID number, a 9-digit number from the IRS, right? Then the next step is you want to get here's what you need to do. You want to get a business address. or a business location where the LLC is going to be at. Again, you want to get a professional business address, not a P.O. box. Now they call them virtual offices or virtual addresses, right? This is where all your mail is going to come, not to your personal address. The business itself had to be set up legally and by itself. So when you form your LLC, you create the LLC, and the document that you're going to get back is called the Articles of Organization, which comes from the state. Then you're going to have what they call an operating agreement for the LLC. Then you have to have what they call the members certificate. So when there's one person that owns the LLC, that's called a single member LLC, right? Then you have to have, if it's more than one person in the LLC, that's called a partnership LLC. So you're going to have to keep record of all the minutes. The minutes, when you have a meeting, the minutes, right? When you have a meeting, which are you recording the minutes of the meeting? Then you should get a business bank account. You never commingle the funds. And for those out there being told by people, if you want business credit, then you should take your W-2 income and deposit that into your business checking. No. That is a major mistake. That is criminal behavior, and it's going to catch up to you. The money that comes into your account should be either a couple of things. One, a service that you provided, which is consulting, bookkeeping. You provide some type of consulting, whether it was legal consulting, financial consulting, business consulting. If you own a bookkeeping company, so that's from a service. A sale, if you sell, for example, you have an online store where you sell clothing, you sell cosmetics, you sell shea butter, you sell cocoa butter, you sell different soaps. So these are sales. You have an online sales store, or you own a retail store. You generate the sales from cash or credit card or debit card, which now goes into your business checking account. So your income is coming from a service or a sale of a merchandise or product. Another way money comes into your bank account, which is not income, but it can come in as a deposit. Let's say you got a loan. You receive a loan from the bank or the credit union, which is called a term loan. And you borrow $10,000, and they made this $10,000 available Monday, April 8th, 2024. Tomorrow you're going to receive $10,000 based on the application that you applied for from your bank or your credit union, and the money is going to be deposited into your business bank account on tomorrow, April the 8th. You're going to receive this money, which is going to be a loan, a term loan that you have to pay back over time. Third, let's say, for example, you are transferring money in from your personal account into your business account to cover the expenses. Let's say payroll. You're buying a piece of equipment. You need supplies. So this is to cover any operating costs of the business. Now, there are people teaching that in order to build up business credit, you're going to deposit your job paycheck. So instead of having direct deposit to your personal account, you have direct deposit to your business account. That is criminal behavior. That is stupid advice. If anyone tell you to do that, you better run. You know why? Let's suppose you make $60,000. Your gross salary is $60,000, but your take-home pay for the year was, I'm speaking hypothetically, $50,000. So now, every 2 weeks, you're gonna have your income from your job, which is already taxed at one level, but you want to put it into your business account, trying to show the banks or the credit union that your business is making money. Right? Now, here's a problem with that. Here's a problem with that. When you take your income from your job, which has already been taxed, and then put it into your business account, and let's say, for example, now you're telling the IRS at the end of the year that this $50,000 came from a service or a sale. This came from a service that you provided someone, or you sold a sale of merchandise and products that you sold from your online retail store or your retail store. You're telling you're telling the IRS and the state, or even the local, that the income that you generate for the year came from a service that you provided or a sale of a merchandise or product. But they don't know that that income that you have and that you're reporting is actually from your job. So it's already been taxed. This is your net pay, your net earnings, or the take-home pay that you put it into your business account, because some business advisor or business coach or those who say teaching about business credit gave you this ridiculous advice, and I'm going to show you what's going to happen. Let's suppose you put in your business checking, your job income, your take-home pay of $50,000. It goes into your business account, and let's say you now you want to take write-offs like a cell phone. You want to pay your car payment, your car insurance, any car repairs. You want to claim your cell phone, your internet, and you're paying for these things out of your business account, but you're not doing any business. So now, let's say hypothetically, and are you paying your rent? So now, hypothetically, let's suppose not including rent, your expenses for the year, which I just mentioned, total $10,000. Now, you're going to get a W-2 from your job, and on your job, you took home $50,000. Your W-2 is going to show your total wages and box number 1, box number 3 is Social Security, and box number 5 is the Medicare. So in box 1, your total wages, and we're not talking about you didn't participate in the 401k plan, you didn't participate in the HSA health savings account, you participated in nothing, but you brought home $50,000. So your gross earnings for that year was $60,000, which is going to be reported. Your total wage is going to be on box 1. Now, box 2 is going to show you the federal taxes withheld and paid. Right? Box 4 is for the Social Security. Box 6 is for Medicare. So Social Security is 6.2%. Medicare is 2.9%. So you take box 3 total earnings, multiply that by 6.2%, you should get the total in box 4. You're going to take box 5, Medicare, total wages, times that by 2.9%, you're going to get that in what? Box 6. Box 1 is going to have total wages because you didn't participate in what they call pre-tax, which would be 401k, 403b, which is IRA account, which is individual retirement account that you put in the job. So on your W-2, it's going to show $60,000. But what you did was you got bad advice. Trying to scam the government. Trying to scam the banks and the credit unions. And some financial expert, someone who teaches about business credit, said, listen, take your job earnings, the money that you get from your job, you're going to deposit into your business bank account, and it's going to make it seem like the business itself is generating revenue. And a lot of you going to fall for that lie. And what's going to happen is you're going to put the $50,000 on the Schedule C, which is for profit. So when you have a single member LLC, the schedule form you're going to use is a Schedule C to report all income and expenses from the business. So you're going to report $50,000 as your gross on line 1 of the Schedule C, which is gross receipts. Right? Now, when you go to the second part of the Schedule C, you're going to list your expenses. I told you $10,000 worth of expenses, right? So majority is going to be on line 27A of the expenses. You're going to put the telephone expenses, how much you pay for your cell phone for the year, total $10,000. Now, you're going to have a net profit, a fake net profit of $40,000. Because 10,000 minus 50,000 is 40,000. Why? Because your expenses was less than your revenue. The fake revenue. The W-2, your job revenue that you had direct deposited to your business account. To show, because someone told you, went to someone who does business credit, who are business gurus, they're experts, they're YouTubers, they told you to do this. And the Lord said, my people are like sheep led to the slaughter. Because sheep is the most gullible animals they are. And you fell for this. Now you have a net profit of 40,000. It's not really a profit. It's a fake profit. But now, guess what happened? Your gross income, W-2 wages on line 1 of the 1040, going to say $60,000. All right, now here we go. Guess where that $40,000 is going to go now? On the Schedule 1, line number 3, going to show a profit of $40,000. And guess where that $40,000 is going to be? Then from Schedule 1, it's going to flow on to the 1040 on line number 8, where it says other income of $40,000. Now, your income for the year is going to be $100,000. So now you're going to be taxed on that $100,000. I didn't mention the filing status: single, married, filing joint, head of household. So you're going to be taxed. Now you're $100,000 minus your filing status. Let's say you're single. It's $13,800. $13,880. Minus that 100 is what's going to be left over. Now you start decreasing it. Now, as I mentioned, on that $100,000, you're being taxed on the federal level, on the state level, and there's something called self-employment tax. Self-employment tax is 15.3% that you're going to pay. So you're going to be taxed on the federal, and your marginal rate could be anywhere between 22 to 24%, based on where your income is at. The highest is up to 37%. Then you're being taxed at the state level. Pennsylvania state tax is 3.7%. Then you're going to be paying self-employment tax on the fake net profit of $40,000. So now you're paying federal, state, Self-employment taxes. Oh my God. Why? Because you went and listened to someone who you thought had your best interests. Do things correct and do them right so that it doesn't come back to bite you at the end. And a lot of people are being misinformed. That's why the Lord said, my people were destroyed for the lack of knowledge. Because where they lack knowledge, they lack the information. Because they reject knowledge. What are they rejecting? They're not coming to a tax accountant or CPA or a tax professional or a tax lawyer or even an enroll agent. Those who deal with taxes of us, they're not coming to us. They're trying to take the shortcut. Not only is there criminality in the rich, there's also criminality in the middle class, criminality in the poor. Everybody's trying to get over, but there's some that play it better than others. Because what's sad is that many people are being taken. Many people are being taken advantage of. And they're using these catchphrases, generation wealth. Why work for somebody when you can work for yourself? Investing into real estate, passive income, multi-level marketing, all these different catchphrases. Oh, you'll never be rich by saving. Okay, the rich save and invest. You'll never acquire assets from saving. No, you save and then you invest your money into buying stocks and bonds. You need to be taught. So many people are being misinformed. Many people are practicing criminal behavior. I mean, one lady, she said, she asked a guy at a conference. She said to him, so let me ask you this question. I have an LLC and I'm living with somebody who's getting Section 8. Can I claim that as a rental expense? Why? Because he mentioned there's something called the Augusta Rule. The Augusta Rule says that if you are a homeowner and you have a business and you have a home office, you can lease out to the business, you can lease out to your business, and the rule is 14 days or less, it does not count as income, but you can write that off. Does not count as income. Look up I want to do a video on the Augusta Rule. He said, no, you can't do that. How can you claim rental expenses someone on Section 8? That's government assistance. See how she was thinking? She thought, oh, I'm going to form an LLC and I'm going to be able to write this off. Because many people are told that this is what the rich do. And I'm being honest, whether it's rich, middle class, or poor, a lot of people have criminal behavior. And that's why it's important to educate yourself. That's why it's important to read and invest in yourself. And many people don't invest in themselves. People are like sheep. Sheep is a gullible animal, led to the slaughter. Why? If the blind lead the blind, should they not fall into a ditch or should they not fall into a trap? Because once the blind lead the blind, I'm going to say, now that person that's blind is seeking out another person to follow them. And they have become disciples of what? False information. Because they said if the blind, that fake leader, lead those that are blind, should they not fall into a trap? Yeah, they're going to fall into a ditch, which is a trap. Because in order for that blind, the blind is a fake false leader. False leader who gives out false information. And sometimes that leader can appear to be very knowledgeable. whom you look up to, whom you worship, not knowing that they're leading you into what? Into a ditch, a hole, into worse circumstances than what you already had. They're selling you false hope and false dreams, knowing that they're conning the hell out of you. Many people, especially older people, are being conned by saying, oh, generational wealth. I want to create generational wealth. I want to leave a legacy behind. There's nothing wrong with that. But you have to think for a minute. Many people are going into their retirement accounts and being scammed by so-called real estate investors. Their hard-earned money, they work 40 years, then they retire in their 60s, and someone comes along, listen, I can show you how to get rich. What about generational wealth? Are you tired of being broke? Make your money work for you. Now, you go into your 401k or your Roth IRA, your 403b, and you taking out over $100,000 and giving it to this person. They say, well, you're gonna get a return on investment of 10% back every day. Guess what? A month go by, you don't get your money. Why? In order to pay back you, they have to have a new investor to come in. And from that new investor's money is how they're going to pay back you. And when that person comes in, they're looking for their money. That third person comes in and make that investment is going to pay person number two. That's called a Ponzi scheme. And that's how it works. But I will be back making more videos. I say to everyone, health, happiness, prosperity, success, and the abundance of all things. Good night to everyone.